Aloha and happy Easter, everyone. Hope you're having a nice long weekend. Whenever we get back to the market on Monday, we're looking at a stock market that's looking like it's overall rolling over. You can see looking at the S&P 500. What I want to look at here is the MACD down here and the RSI right here. RSI on the S&P 500 basically looks the same way in every index. Lower highs, lower lows, and we're still trending down. MACD looks like basically the MACD in every index. Lower highs, lower lows, trending down. MACD histogram confirming. Tried to bounce, failed. You can see the histogram bounce. MACD never crossed back above its signal line, and we're heading back lower. So now what we look for is a flush out below the oversold 30 line and a flush out below the March lows. I assume the indexes will take out the March lows. If they do not, and we have a candle over candle reversal, awesome. I'm still long quite a few long positions that are showing not much wrong with it, but overall, the indexes look very weak. We have to respect that. This is a nasty rollover. Lower highs, lower lows, and downtrends in every index and every index oscillators. You don't stand in front of that. You respect that. Now, since we're still holding the March lows, we're still under a neutral condition. Once we leave a neutral condition, new longs will be under extremely great scrutiny and position sizes will get reduced further. And now before I get to the new longs, I want to remind everybody, I don't love any of the signals. I didn't want any of the signals to generate. I wanted a nice long weekend. However, really quick, just running through these signals. Whenever you see price, volume, and BOP make that move, make that move, make this move, and make this move, SPXS, I can't ignore it. I have to take it. That's what my system says. Because we're not in a bull market where we previously had a washout of a bear market, which means that we don't get nice long bases. You'll know when I love something whenever you see a volume and BOP surge similar to this, with price doing what it's doing right off a support level that might be months long, and or a breakout the other way around. Maybe FBNC uptrended just like it did here with Max Green BOP though, and now it went sideways on Max Green BOP. And let's say this base right here was like another month longer with Max Green BOP, and then it bounced off support on a huge volume surge with the pocket pivot point signal. You'll know that I love that signal and I want to push capital. But right now, as long as signals are triggering and we're under a neutral condition, I have to take them. But we're reducing size, we're keeping our risk very, very limited, and we're just being super, super, super careful. So overall, I have 5 new positions, 3 longs, 2 hedges. They were all the long positions were only in the price volume BOP scan. However, after further review, they are all semi-CAN-SUM quality. So under a buy condition, they would have gotten at least 2 to 3%. This weekend, 1% only. SPXS and BZQ were both in my ETF scans and my price volume BOP scans. Or wait, SPXS was not in my price volume BOP scan, but they both made my ETF scan. However, they're all extended from their 20-day moving average. So their position size automatically gets cut in half. And with BZQ being an add and SPXS only being in one scan, that's only 0.5% of my account capital. Now I want to remind you, 0.5% of my account capital, the smallest amount of capital I put into anything, would be like, let's say, a 50-cent stock and 0.5% triggers. That's going to be about $2,000 total of my current account capital that I have in the stock market invested in BZQ. It's not 100, it's not 200, it's not 500. So a $1 commission on a $2,000 position makes sense. But if 0.5% of your account capital is like $50, and obviously this trade doesn't make sense, so you don't make the trade. So keep all of this in mind. A signal is a signal is a signal in my system. None of these are great, but I got to take them. So let's get to them. SHI, huge pocket pivot point signal volume surge with BOP surging to max green BOP. First cut loss level, very clear. It's the low of day, 57.60. It takes out 57.60 on light volume and max green BOP. I'm willing to let it pull all the way back to these lows here. However, if it fails this low on heavier volume, the next low of day is the final low of day, and I am out, especially if it loses green BOP or pulls back on above average volume. Done, done, done. SHI, I'm expecting a similar measure move from November to January, so I expect expected to get back up to the old February highs and break out. So we're looking at over a 4-to-1 reward risk position. I got to take it. Limit order 58.72, first cut loss 57.60, and then an emergency cut loss if it makes it all the way back here like at 55.52. But I don't think that it would pull back that far before I'm all out. So SHI 1%, semi-canceling quality in my price volume BOP. XBKS, this is kind of a buyback signal. I was once long this stock as it trended higher from back here on up, but then it slowly rolled over and I got knocked out of all of it sometime around here. Bounced off the 200-day moving average once. Even though that this day has big volume and it closed off its highs, it still closed higher than where it opened. It's consolidated sideways on green BOP, dipped, BOP is racing back up. Big surge in BOP on Thursday with a big volume surge after a quiet candle the day before, and a big huge hammer pattern right off the 200-day moving average. So I'm going long XBKS 25.35 a limit. My first cut loss level, I'll move below 24.50. My final cut loss level will move below 24.05. It's not a big position, but it's a buyback, so it's definitely got to be taken, especially with all this green BOP on the chart. I would hate to pass up on this stock and then see it race higher without me. I would rather take it long, be wrong, than not take it long, miss out, and hate myself. So I'll go ahead and do that. And then the final regular long position, FBNC, this is probably the best looking new long position. I only wish that BOP would have exploded even higher, but I like that the green BOP is higher than the previous levels of the green BOP. I like that volume was well above average after a low volume pullback. I like that it's bouncing right off support, so our risk is very well minimized. Once again, I'm looking for a measured move from November to February, so at least gets to the old highs and then breaks out and hopefully does this again, and hopefully it does it looking like this with that volume and BOP. If not, my first cut loss level is very clear. The low of day, 27.95. It goes below 27.95. I'm out of half. It goes below 27.69. I'm out of all of it. It goes below 27.95 before it goes below the final low of day in March on heavier volume. Then the next low of day becomes the new final cut loss level, and this level will never come into play. But with the way this chart looks, with the way XBKS looks, and the way SHI looks, I got to take them. Now on the other side, I got two hedge signals. SPXS was in my ETF scan. Once again, I don't want it to trigger a signal, but it does. Price, volume, BOP surge, highest BOP surge in the past month plus. Pocket pivot point signal. The only problem is, like I said, it's extended from the 5, 10, 20-day moving average, so I'm not buying it up here. My limit order is going to be at 934. If I can get it filled at 934, I'm then going to work, even though this is only about a $2,000 position, 3 stop levels, 912, 9, and 886. It fails 886, I'll be out of this signal, as it'll probably be a reversal. And what I might even do, just so I can hold it for a period of time, if it does trend higher, I might then use this as a stop loss level, then this level, then this level, and then this level, just so I can continue to have a hedge in an overvalued, overbought market. It's kind of the way that I'm holding all the other ones that I'm long, like SRTY, SOXS, FINZ. Even when these things break to new lows, I'll still have half of whatever is left. And then the final long position, well, first off, so SPXS, already explained it. BZQ is an add signal. I do not have a position in BZQ as my limit never got filled, so here I am just twiddling my thumbs. A regular position would be 0.5, but I'm going to go ahead and put 1% of my account capital on it. However, this one's kind of really extended. It's extended from the 20 and the 10-day moving average, and a small pullback to this high day is not good enough. My limit order is going to be at 14.17. So if I can't get long BZQ at 14.17, I will just continue to not have it. But once again, this stock had that volume and BOP surge, and even though BOP's not green, it still made my tertiary scan that looks for green BOP, which means this is on the cusp. 1 point higher, it would have had green BOP. So I'm going to count it, especially since I don't have a position, and it's a pocket pivot point signal. But once again, BZQ, if I'm wrong, first cut loss level 1337, and on this position, final cut loss level 1280, depending on how it acts. If it acts really well, pulls back in an orderly fashion, I might then go ahead, since I don't have that original position, and put a stop level at 1190. Like I said, I don't know how I'm going to split SPXS up, BZQ up. I'm just explaining to you all the scenarios that I might take. You can figure out what you want to do. But SHI, FBNC, and XBKS, these are too good of signals for me not to take. I wish they wouldn't have triggered, but since they did, we take them. All right, everyone. I'll see you in the chat room on Monday. Aloha.